big banks, traditional banks, the banks that your grandmother used, are they dying? I'm talking about Chase. I'm talking about Wells Fargo. I'm talking about TD Bank, okay? I'm talking about Citibank, Capital One. I think Capital One is a credit card, right? But I'm talking about the big banks that have been around for like over 10 years, 30 years. Are they dying? Now, the question comes from, like, online banks are coming out. We've done a few videos on the channel. Well, not a few, a ton of videos on the channel with the new banks that are coming out, like Vero, the Aspirational Bank, the Discovery checking accounts now, like Chim. Like, there's a whole bunch of banks now that are coming out online solely with no branches that are coming out. And people are thinking, well, I think this is the future, right? I think this is the future of everything, and this is going to be like the how you actually do things in the future. No cash, no physical branches. And the answer to that, guys, is kind of like, yeah, it can be, and it already has begun. Now, here's the thing though. A lot of people ask me, Tommy, I get it. You do a lot of these videos, and that's great, but you never really talk about Chase, right? And why you actually stay with Chase. Now, here's the deal. Chase has over $2.5 trillion in assets. That's trillion with a T, all right? $1 trillion in assets, and it also has almost the same in liabilities. What that means is that the company owes a lot of money, it has a lot of liabilities, but I don't really trust that because that can just be, an accounting tactic to actually, lower their taxes and stuff like that. So here's the deal, all right? How can I say that big banks are dying when I have this information to kind of back it up, all right? And here's the deal. I'm not against online banking, but I do see what they're doing. They're basically poaching customers from physical banks right now while it still can. The reason is this, right? And the reason I think that big banks don't really care is because it's kind of strange, okay? It's a very strange tactic. Here's why, right? For me to get a Vero account, right? For me to get an Aspirational account, a Discover account, for me to get any of these, like Chim, any of these like online banks, right? Only online banks, I still need a physical bank to actually send the money to them, unless I do direct deposit with my job directly to that bank. But if I'm doing cash, or I'm depositing money, or I'm trying to transfer money over there, I still need a physical bank. So it's kind of like, okay, so you're trying to take me out of business, but you still need me so you can even use your services, okay? Because I still need a Chase account to use the Aspirational Bank account, okay? Which makes no sense, right? It's kind of like big brother, but the little brother still needs to check up on the big brother to do what he needs to get done, all right? It makes no sense, right? Now, for every single person out there that might think, Tommy, you're right, but eventually they won't need the big banks, right? And they can just do their entire thing by themselves. Here's the thing. What these online banks are doing right now are little tactics, right? They're trying to get you while you're young, while you're a millennial, and usually like the target market isn't really like, older people in the older generation, right? It's us, like, young adults, right? The reason is because we're more likely to be okay with like not having a physical branch. But if you ask like a person like over 40, like, hey, would you be okay with not having a physical branch? They'll be like, what? I need to go to my bank to take out my money, to talk to a real person, and to do everything like that. Physical, okay? But us, we don't really care about that. Now, here's the thing. Companies like Chase, companies like the online banks, what they're doing is basically this, right? They're creating little marketing tactics to actually attract millennials to their company. The way they do this is by offering credit cards. Like, for example, right, Chase. I'm going to talk a bit about Chase, right? Chase is literally a one-stop shop. Now, if you've been watching my channel for a while, you know that I'm big on a one-stop shop, right? It means that you can go someplace that has everything you need at the best value price, right? In this case, Chase doesn't have the best value price for everything, but they do have everything, okay? What I mean by this is they have a check-ins, right? They have a savings, investment account, Roth IRA account, loans for like a car loan, loans for a regular loan, personal loans for like a mortgage, like whatever you need, they have it. And they used to be like you needed $10,000 to start like an investment account with Chase. Now you can literally do it for $0, and then you just have to pay like trading fees of like around $2.95. Now, the apps that I think are not gonna go really obsolete are probably like Acorn, Robinhood, and all those little apps out there. Why? Because they actually were really ahead of the curve, and they already got the big market share of those customers, right? For example, I think Acorn has over like a million users already, right? Because a debit card sold out like 300,000, okay? So, and I also think that Robinhood has over 1 million users also, right? So they have a big market share of the customers, right? So they're not really worried about anything that's going on. But these little banks that are coming out now with these online banking, they have like maybe like $300 million in like capital, maybe 400 million, maybe 500 million. It's really not a big deal because we're talking about a bank that has over $2.5 trillion just in assets on their books, okay? So here's the deal. Chase created the unlimited card the Sapphire card, and a whole bunch of other credit cards, right? The reason to do this is to attract millennials, right? And the reason that Chase is not going to go out of business like very soon is because the older generation still has another like 20 to 40 years alive, right? And by the time they pass away, Chase is already gonna renovate the entire banking system and innovate it for us, right? Which is normal, but they still have around 20 to 40 years to actually catch up and actually do whatever they want to do. But I'm going to tell you why they don't really have to catch up, because they're already ahead of the curve, okay? Now, it's very strange. You might say, Tommy, what are you talking about? They're still charging fees. They're still doing all this stuff. You can't say that. Well, I'm going to tell you exactly why after I get done with this point, right? They created all these credit cards to attract millennials, right? Because like there's literally a credit card on the Chase, right? I think it's the Sapphire card. Like you can literally spend $4,000, right? And then you get $750 back, and you can travel with that money, right? It's for millennials. They like to travel, they like to spend money, they like to do this stuff. So it's for millennials, right? And here's the deal. If you catch someone early on, right? Early on in their 20s, right? You can usually catch them for the rest of their lives, right? What this means is because Chase is an online, like a one-stop shop, you can get them for the credit card. You can get them for the check-ins. You can get them from the investment account. Then you can get them when they start a family and they need a house for the mortgage. You can get them for everything. You can literally squeeze so much money out of one person that is completely insane, right? Now, you're probably saying, Tommy, that's true, but with the new competition, people aren't really going to go with like Chase anymore. They're going to go with like Vero. They're going to go with the aspirational app. They're going to go with these good people bank, okay? Now, here's the deal. That's not true. The reason is because Chase Online Banking, right? Chase Online Banking, like the app that I pull up on my phone all the time, that app has over 25 million active users. That's like individual users. Like when you watch a YouTube video and it's like 25 million like viewers, and like that person watched the video like 10 times, so in reality it's not really like 25 million people watched your video. That's not what I'm talking about. I'm talking about 25 million active users on this app, okay? And if you do some quick math, right? That's 25 million, right? If you take that 25 million people, right? 25 million people, and say like maybe half of them, right? Pay they pay like a regular like monthly maintenance fee of maybe $12. We times it by 0.50, right? To get the half, and then we times it by like maybe $12. That's around $150 million in revenue just from fees, right? Just from one fee, okay? So online banks aren't really going extinct anytime soon because Chase has already innovated to actually get into the system. Now, Chase has been doing this for over, I think, 3 years now. Maybe, yeah, like 3 years. They had the Chase app like maybe 3 years ago, okay? Now it's a time when these new online banks are coming out with all these like gimmicky features to the point where it's like, okay, come to our bank and we'll poach, right? If we get you early on now with our check-ins and savings, maybe then we can renovate everything and actually offer mortgages and loans. But the reason I don't think they're going to be able to do that right now is because it takes a lot of capital to be able to do that, right? Me personally, well, I personally know how it happens, right? You know how Moneyline, right? Moneyline, you can actually go in the app. You have a check-ins, you have a savings, you have an investment account, and you also even have loans to actually take out. Why do you think the minimum is only $500? You think it's just because like, oh, it's just like, to be safe because you don't really need that much money. It's probably because they don't have that much capital. When you're talking about having 1 million people and say 1 million of those people, maybe half of those people, right? 500,000 people like need like maybe like $100,000 in loans. It's a lot of money, okay? That's why a big company like Chase that has 2.5 trillion in assets can do whatever they want to do. Now, here's my deal. Here's another factor that plays into this, right? Banks like Chase have over like what is it, like 2 decades? No, I think wow, way more than 2 decades. I think like Chase has been around for like maybe like over 90 years, maybe even 100 years, right? They've been around for a very long time, and it used to be just called like JP Morgan, then it became JP Morgan Chase, and then it became then they bought another bank. Okay, so this bank is always buying and poaching other companies whenever they need to really innovate things. Okay, so here's my prediction on the entire thing, and we can play this video like 10 years down the line, and you can say, wow, Tommy, you were wrong about everything, or Tommy, hey, you had a little glimpse of reality there somewhere. But here's what I predict is gonna happen, right? I predict this, right? The only companies that are really gonna stay around is probably like maybe Acorn, and maybe even not, I don't know. Maybe Acorn, maybe Robinhood, maybe Tally because it's like a very innovative way to actually pay the money down if they offer better rates. Okay, I like Tally a lot. But apps like maybe Moneyline, apps like Vero, apps like Aspiration, apps like Discovery, I don't know if they will be around. Okay, and the reason is because Chase can quickly just overcome all those things just by changing one thing. If Chase says, all right, we're not going to charge fees anymore. No ATM fees. All right, you can put your money in. We're going to offer 2.5% on your savings. We're going to offer this. We're going to offer that. And if you notice something, right, Chase might not pay you any money on your savings, but if you are an investor with Chase, they pay you around 3.15% a year just in dividends, okay? So they're very good to their investors, but although they might not be good to their savers. And I think that the reason they do this is because they understand that, you know, only around like, well, not even that, maybe around 10% of people actually save a lot of money because it's not really a big market. Now you might tell me, Tommy, what are you talking about? Everybody likes saving money. In reality, I did some research. You guys know that 69% of people in America have less than $1,000 in their bank account, right? And the savings accounts, right? Almost 1,000, but not really there. And then 34% of Americans don't even have a savings account, all right? And that's the thing, okay? Maybe it's us, the ones that are watching the video that actually have money to save and actually saving money, that we actually go to those places like Markets by Goldman Sachs and stuff like that. But other people, they're not really interested in savings unless they they start changing their habits. So it's not really a big market. It's not really a big changing ground. And what people really care about right now is basically credit cards and loans, all right? That's the biggest market because every single person out there is getting themselves into debt. So here's my deal. Do I think that Vero, Chim, aspirational apps should close the doors right now? No. Because I also believe in competition. I also believe in things changing. And I also believe that anything can actually happen. So, you see, I told you my answer might surprise you, right? I don't know if Chase will be around. I don't know if aspirational will be around. And the reason is because things change all the time, right? But I believe if a company actually comes through, right, and starts offering everything, step by step. We got the check-ins account. We got the savings accounts. We offer a really good rate on all of this stuff. We have no fees anywhere. You can use any ATM in the world. We can use deposits without having to use a third party. You can do all these things, right? Maybe after a year or 2 years, then you start offering credit cards, right? Then you start offering loans, right? But you start doing everything in a way that's actually going to help the customer, right? Because if a person is financially healthy, then the amount of problems you can solve for them are going to be for a higher price. What I mean by this is this, right, guys? If you're like a Vero agent, a Moneyline agent, and you're watching this video, I'm not saying that you guys are going to go out of business, okay? What I'm saying is you guys need to innovate in a way that makes sense for the customer, okay? If you have a customer with a check-ins account and a savings accounts, right, and you're offering them maybe 2.10% on the savings, right? That's a very good rate. That's not bad, right? And then you're also offering like no fees on the check-ins, okay? You can go on any ATM, you can use it. Then you also invested in like deposits, so like you can use any ATM to actually deposit money and put the money right into your account like instantly. That's great, right? Once you have that taken care of, right? Once everybody's happy with that, then you start by doing, you know what next, right? Because you're going to have a big surplus of money in the savings and check-ins accounts because people are going to be more likely to keep money there if there are no fees attached, right? So once you have that in place, and you start doing credit cards, but you start doing credit cards in a way that actually benefits the person in the way that you say, well, our credit card is basically a card that helps you build more credit, all while telling you that we're going to charge you interest, and maybe you can avoid interest if you do it like this and you do it like that, right? Some people are still going to screw up. So you're still going to make money. It doesn't matter. Once you got that settled down, then you start with loans, right? Once you get into loans, small little loans, maybe $500 like Moneyline, then you get into mortgages. Once you get into mortgages, you just keep going and keep going and keep going, all while educating your users. And if your users are educated, then they will have a lot more money to actually invest, either in real estate, in properties, in investment funds, in all these things. That means more money in your pocket so you can actually invest it. So I think this video surprised everyone that I'm just giving advice to the new online banks, and I don't really care who wins or who dies, all right? The thing is, competition is real, capitalism is real, and I don't think Chase is going to go anywhere. Well, because they're a very innovative, they're a very innovative company, and they're a company that's very cutthroat, okay? If you're taking away our business, we might just buy you out, all right? And that's what I see them doing. I'll see you guys next time on the next video. Thanks for watching. My name is TommyBryson. If you don't know me, you know me now. Go ahead and like and subscribe and comment down below if you believe that banks are going to go extinct. I don't think so. It's not dinosaur, okay? But yeah, let me know in the comments down below if you agree with what I have to say, if you don't agree, and let me know if you have any recommendations for a future video, because I will get it done in the next few days. That's how I work. You recommend it, I get it done. You have your video, I have the view. Right? That's how it works. That's how it works. Yeah, that's how it works. All right. I'll see you guys next time on the next video, and peace.
You've got to start at the bottom.